Bitcoin has not done wonderfully. We started buying at 74,000 all the way up to about 105, and I'm fine with it. I don't take advice from all Bitcoiners today. The Bitcoiners out there that bought 11 or 12 years ago, he bought Bitcoin for $1. He's not a genius. In fact, I would say that he was merely lucky. Real estate's under this really huge correction right now that nobody talks about. We're so busy talking about the Iran and SpaceX and AI. I'll outperform STRC. I'm built for the guy that wants an 18 and wants the real asset. Probably it's more like MSTR, but with the one difference, which a lot of people like, I have a real asset. This $4 trillion REIT industry. If I get 10% of that, I'll be a $400 billion company. Bitcoin is a location play. When you combine these, it's like a yin and a yang.
You've had over a year now of doing these real estate Bitcoin hybrids, and they've been doing wonderfully for you, correct?
Well, the Bitcoin has not done wonderfully. So we started buying at 88. I think it was 88. No, we started buying at 74,000. We bought through 82, 84, 86, 92, all the way up to about 105. We accumulated last year about 2,000 Bitcoin. So obviously all that's pulled back. Our average, I've been buying Bitcoin since, for about 14 years, but we started doing the real estate Bitcoin hybrid January of 25. We're on our fifth deal now. And what we do is we basically buy the real estate. We buy real estate that's undervalued. If it's 30% below replacement cost, we're going to stack it with 30% of that price of Bitcoin. So we're going to have a total going in of the replacement cost of the real estate, believing that once I get back to replacement costs on the real estate's under this really huge correction right now that nobody talks about. We're so busy talking about the Iran and SpaceX and AI that nobody's paying attention to real estate. Commercial real estate is having massive correction. Like we're buying a deal right now, 40% below replacement costs in Naples, Florida. It's going to be $90 million. It should be selling for like 110 or 115. We're buying it for $90 million, 282 units, and we're going to add 282 Bitcoin to the purchase. So we'll pay cash for the real estate. We'll pay cash for the Bitcoin and connect them. Our entry price into the Bitcoin will be around $64,000. Our asset, the real estate investment will be at around 90 million. We combine both of those, and then I let my audience know that we bought them. I think we'll be all in at about 115 or so. And then I'll tell my audience, if there's 115 investors, each one of them puts $1 million in, I'm just using this example, then each of the 115 owners will now participate in the upside of the real estate and the Bitcoin. The ultimate goal is not to sell the real estate or the Bitcoin, but it's to put both of these together with these other 4, 5, or 6 purchases and take them to the public market as a real estate Bitcoin hybrid. It'll be one of the first in the marketplace, only one in the marketplace, and we believe we're creating a financial vehicle here that can't be easily duplicated because of the people that we compete with, like the REITs. Real estate investment trusts cannot keep any currency on their balance sheet. They have to distribute 90% of their cash back to their investors because of their tax structure. So we have the largest institutional players on planet Earth cannot compete with this real estate Bitcoin hybrid because of their tax structure. So it's going to give us, we'll be in a position, we believe, where, a decent piece of real estate will return. An institution wants like a 12% return on that asset. We think we'll buy that same asset below replacement costs, add the Bitcoin, and we end up with a 25, probably a double or maybe even a triple because of this platform, and start to pull out of this $4 trillion REIT industry. There's about 4 trillion. If I get 10% of that, I'll be a $400 billion company. If my thinking's too big, I cut it in half and only get 5%. I would be 200 billion, and I'd be the largest real estate company in America with less real estate than my competitors because of the Bitcoin. That means, I'm sorry to interrupt you, but that means I could end up being a larger real estate operator with less roofs, less gutters, less maintenance, less capex, less property taxes, less termites, less evictions, less government control, because we hybrided the two together. We could still be bigger.
So this could completely disrupt and destroy the REIT industry, right?
I hope so.
Does that put a target on your back? Do these guys know what you're doing, and are they scared of what the future could bring?
I don't think so. These are a bunch of old white guys, man. You know, they've made money one way. They've made money buying real estate. You know, Blackstone's got 180,000 units. I'm sorry, Blackstone has 280,000 units. A buddy of mine owns a company called Cortland. They own 180,000 units. They're not adding Bitcoin to their balance sheet. Not in. They're all 55 and 60 years old. Starwood owns 140,000 affordable units. Dude, they're not thinking about Bitcoin. They're thinking about, we have roofs. We have to buy 300 property roofs this year. You know, they own a bunch of 1980 and 1990 product. They're going to have termites on 20% of those this year. So they're fixing swimming pools every day. They're redoing and rehabbing kitchens and floors and evictions. And they got assets in hotels and apartments in New York, and they're worried about Mandami. Adding Bitcoin to their treasury is like, fuck, dude, bro, we got our hands full right now. One, they have their hands full. Two, their structure legally would not allow them to do it. Now, there's all the other syndicators that aren't REITs, privately held, like the Camdens and the Avalons that own, you know, they're big owners. But these guys, these are 60-year-old white guys that have made their money with physical assets, waiting for rents to grow, and they're moving into retirement. They're not moving into a new growth stage, and they're exhausted. Real estate is a very heavy, tiring, it's an exhausting game because it's such a heavy asset. So imagine doing this for 30 or 40 years, and when you're 60 years old, hey, we got a new idea. You're like, new idea? Fuck, I just want to take a vacation. I don't want any new ideas. I just want to get out of the game. So I'm basically hitting an industry that's very, very old, 65 years old. The REIT industry's been around since 1965. The people that surround it and work in it are old, conservative, fiat-based, TradFi. You telling them Bitcoin's going to change the world, they're like, what are you talking about? Okay, I've made all my money one way. I want to get off this train and I want to go into retirement. So I'm hitting a spot that I believe will have very, very little competition, even if it was wanted and warranted. I've met with all the groups that I've mentioned already. I've showed them my model, showed the president of Starwood the model. He's like, I own Bitcoin twice, sold it twice, and wish if I had the model that you have, I would have never sold my Bitcoin. And his entry's like $6,000. Mm-hmm. But he saw it go from 6 to 30, flipped it, made some money. He's like, if I would have had your model, because it's tied to, it's fused together with that asset, I wouldn't have sold the real estate. I would not have sold the Bitcoin, and he would have the best of both worlds. And also, I believe I met with Fannie Mae, three or 4 weeks ago. And they were like, explain to us the Bitcoin thing. Now, Fannie Mae does $11 trillion in real estate debt. That's what they have on their books today. And I said, explain to me, we heard you're doing the real estate thing, the Bitcoin thing, because when you get big enough with Fannie or Freddie, you have to go meet with those guys before they give you a new tranche of money. They're required to do their further due diligence on the party. And so it was that time of the year for us to go meet with them. And they're like, explain to me the Bitcoin thing. I said, well, the Bitcoin sits on our treasury, basically with that asset. You're not lending me money on the Bitcoin. He says, okay, so we gave you a 50% loan on that real estate deal. What's the Bitcoin have to do with it? Nothing, except the Bitcoin sits in that LLC. He's like, so it's sitting there like money. I said, yeah, dude, it's sitting there like I have $100 million deal. I have $50 million of debt with you. The $100 million deal is servicing the debt. And then I have another $50 million in Bitcoin sitting in this platform. And I said, if I had 50 million in cash, it wouldn't bother you, right? He's like, no, that'd be great for us because you have CapEx that you can take care of, or you could pay down the loan if you need to. I said, exactly. But what I have is $50 million of Bitcoin that's extremely volatile. It could be 50 million today, 25 tomorrow. It could be 10 million. I mean, it might just, the bottom might drop out of it. Could go to zero, by the way. You're not connected to it. But, and he said, yeah, but it could go to 200 million. I said, it could. I hope it does. And then my belief in the future, my goal, and I told Fannie this, my goal is to come to you. I'm going to keep building these out. I don't need you to lend me money to buy the Bitcoin. I'm not asking them to do that right now. I'm going to come to you in the future with a batch of these. And I'm going to ask Fannie to create a Fannie Bitcoin mortgage. And I'm going to, in the future, I'm going to come to you guys. Once the marketplace buys into this concept. And the way to do that is for me to prove the concept, to validate the concept. I'm going to come to you guys and I'm going to try to get a loan, a long-term loan, 12 or 15 years, or maybe even 20 years, or maybe 30 years on a commercial asset. And that would combine the two, okay? So I would ask for like a 30% loan on the real estate and the Bitcoin and get much cheaper money than you could just borrowing against Bitcoin or maybe even just real estate.
Mm-hmm. And so how do your investors benefit from the Bitcoin? You split the upside 50-50, I've heard you say?
Yeah, we do. What we've done on the last two deals and we're doing on this current deals is we do a 8% pref. The real estate's doing about 3 or 4% with the Bitcoin. The real estate would do about 5% without the Bitcoin. It would do cash flow of 5%. When I add the Bitcoin, it pulls the cash flow down by about 40%. So we're still getting a 3% yield on the real estate and the Bitcoin combined. But I'm so confident in the asset, the combination, because of the period of time that we have. We offer the investor 8% preferred. They get the first 8% per year, and it will accumulate if we can't pay it. So in 10 years, I owe the investor 80%, their money back, plus 80%. Once they get their 80% over a 10-year time period, we would then split the upside of the real estate and the Bitcoin 50-50.
Mm. And then you could liquidate the Bitcoin if they requested. That's how it works.
Well, I could liquidate the Bitcoin to, let's say Bitcoin went to $1 million. That project we bought last July, we bought 1,175 Bitcoin. Mm. For every unit, we added 3 Bitcoin. So we bought it was a $235 million asset, and we added $100 million of Bitcoin to the purchase. Let's say Bitcoin went to $1 million today. I have 1,100 Bitcoin there. I could flip off the Bitcoin today for 100. If it went to $1 million, I'd sell it for $1 billion. I'd give them their half. I'd take my half, and we would still own the real estate. Or the real estate could go up 100 million or 200 million. Let's say over the next 5 or 6 years. Easily do that, by the way. We have it mapped out to do that. I could flip off the real estate. I could sell the real estate as condos, pick up a $200 million score on the real estate, make the investors whole on their 8%, and then split 50-50 on the real estate, still own the Bitcoin.
And you think that this could compete with Michael Saylor's STRC?
Well, yeah, in a way it can, because he's offering an 11 with no upside. Mm-hmm. Okay, I'm offering an 8 with a 50% upside of the Bitcoin. I mean, I'll outperform STRC.
Mm-hmm.
But that STRC is not. It's not built. It's built for the guy that wants an 11.
Yeah,
I'm built for the guy that wants an 18, and wants the real asset. I've met with Mike many times. Okay, Mike's an unbelievable guy, genius, phenomenal, like unbelievable. And he actually helped me build this platform. I went to him to get advice about, okay, how would I do this? How do I combine the two? And he's like, well, you shouldn't even do the real estate. You should just do the Bitcoin. I'm like, dude, that's not my business, bro. I'm a real estate guy. So the first deal we did was an 85-15. 85% real estate, 15% Bitcoin. And he says, well, that's a pussy fund. That's not even like, I don't even know why you're bothering. He says, you need to go like 85% Bitcoin and 15% real estate. And I'm like, Mike, why would anybody do that with me? Like, you'd be better off just buying your own Bitcoin and not even being in real estate. I'm a real estate guy. I can't, that's what I'm doing. I'm a real estate investor. That's what my audience expects me to do. So we came up with a model where we're doing, it's 50-50. It's in the case of that last deal, it's a fairly aggressive fund. And then he did STRC after that. And so when I looked at that, we weren't offering a pref. We were doing a 0. I think it was a 0 and 20. 0%, 0 preferred, a little bit of cash flow each year, and then a 20% of the upside. That was the first deal we did. The last deal we did was an 8% preferred, because that gives our investor confidence that it can out deliver a treasury bill. Mm-hmm. And the investor gets a depreciation, a write-off that you don't get from STRC. Because we get a big tax write-off because of the real estate in year one. And then we also get the cash flow. So this will cash flow, and the cash flow will grow as rents grow. But then we also get 50% upside of the, it's more like it's more like MSTR, but with the one difference, which a lot of people like, which is I have a real asset.
Well, Bitcoin's a real asset too, but yes, a real world, yes.
Yeah, I mean, I have a real physical,
Exactly.
I have a physical asset that you can touch. There's an address. You can see this. Mm-hmm. Look, now, the reason real estate is such a big asset class is because you live in it. And, explaining Bitcoin to somebody is very difficult.
Yeah.
Explaining a piece of real estate to someone compared to explaining Bitcoin, look, there's the address, 101 Meisner, Boca Raton. Google it. You can see it. I can't Google Bitcoin.
Yeah.
So 99% of planet Earth understands real estate. Maybe 1% understands Bitcoin. When I put the two together, I don't have to explain the Bitcoin. I have to explain the real estate, show the real estate, show the returns of real estate. A lot of people want to be involved in even have mandates to invest in real estate. The Bitcoin is just a tag along. And I think that's why we've been so successful with this model. I've raised money faster with the real estate Bitcoin hybrid than I ever raised on a straight real estate deal only.
And it opens up the doors to people like CalPERS investing in Bitcoin through this fund, right?
I love that idea because they have a mandate to invest in real estate. I don't know that if they're allowed to invest directly into Bitcoin, but CalPERS could. They have a mandate to invest in real estate, best in class real estate, by the way. CalPERS one day, I believe, will invest in Cardone Capital as a real estate Bitcoin hybrid.
And this could lead you to going public, right?
It could lead to many great things.
I hear you.
It could lead to this being 1965 again, and where REITs have not changed for 66 years or whatever the number is. This could be 1965 where real estate and Bitcoin become the new REIT model.
Mm-hmm. And do you think this is something that a small time investor could replicate? Or do you need to be at your
absolutely.
scale? Yeah.
100% they could. Yeah. You 100%. Now you wouldn't do it on your home. I wouldn't do it on, I would only do it if you're cash flow positive with the Bitcoin. 2, you should be below replacement cost when you make the purchase. Meaning a neighbor can't build for the price that you paid. Three, you don't want to over leverage the asset. So you probably need to be 60% loan to value. And you need long-term debt. You don't need a 3-year loan on this. That's why single family homes don't work. You'd just be better buying off the single family home if you want to buy one and buy a Bitcoin and have them separate. But when you fuse them together, you're creating another kind of animal, right? It's like another movie. It's not Superman's a movie, Batman's a movie. The two of them to get together, it's a different movie. And I'm creating a new financial asset class.
And so now that you've been in this Bitcoin real estate hybrid for over a year, you spent a lot of time with Bitcoiners, you're in spaces all the time. Give me your 30,000 foot view of the Bitcoin community. Where are we right now in its long-term growth trajectory?
The people that I've onboarded, we've onboarded about 1,500 people into our real estate Bitcoin hybrid. They're more, and by the way, 80% of those people owned no Bitcoin until I put them in these hybrids. They are more positive about Bitcoin than the Bitcoin community. Okay. The Bitcoin community today, I would say the sentiment is, they're knee jerkers, and I don't know. I mean, I'm a little disappointed in the Bitcoin community.
Explain.
Well, they don't seem as positive about Bitcoin as they were, like
2 years ago.
Yeah, dude, they windshield wiper pretty easy, like left, right, left. We're in, we're out, we're not, and I look, you can talk about Bitcoin, but if you're not buying it, if you're not buying it, you're not buying it.
Yeah.
And here's the problem with the Bitcoin community. If I can say there's a problem. Look, if you're just waiting for something to go up in value and you're not out creating fiat to buy Bitcoin, like it's this all or nothing concept. It's like I was in a space once and they said, you need to sell this 3 years ago. You need to sell all your real estate, all of it, get rid of all your companies and only own Bitcoin. And I'm like, dude, that's stupid. Like, we live on a fiat planet. Okay. I have businesses that we collect fiat on a daily basis. I have 5 companies. We produce about $700 million of revenue. 99.99% is paid in fiat, some kind of form of fiat. And a tiny bit of it comes in Bitcoin that people pay. And we take Bitcoin across all our platforms and our real estate. But still only a tiny bit is so my job is to go out and collect fiat and convert it to something better. And in my case, I'm converting it to a real estate investment, or I'm converting it to Bitcoin, or in this case, the hybrid. The Bitcoiners out there, the guy that bought 11 or 12 years ago, he bought Bitcoin for $1. When Peter Schiff said, don't buy it, Jim bought $1. He bought 20,000 pieces. He had 20 grand his grandmother gave him, and he bought 20,000 pieces. And he looks up today and he's got, whatever that is, 20,000 times 64 grand. And he didn't do anything brilliant. Like, he's not a genius. In fact, I would say that he was merely lucky, because genius, he's not qualified to be a genius because he didn't buy it at $2. He didn't buy it at $3. He didn't buy it at $10. He didn't buy it at $1,000. He didn't double down again at $2,000, $3,000, $30,000. Like, he quit buying it. So like, for me to take advice from the OGs that bought one time when it was under $100, no thanks. I want to talk to the guys that are buying Bitcoin today, paying today's prices. Mm-hmm. That's who I want to listen to. So I don't take advice from all Bitcoiners today. I'm like, what was your last entry? What was your last purchase? How many did you buy? What percentage of your portfolio is in Bitcoin today? Or are you buying more Bitcoin this week? And if you're not willing to answer those, or you haven't been active in 3 or 4 or 5 years, much less 11 or 12, I'm like, thank you. And I'm glad it worked out for you, but I'm not listening to you.
Yeah, it goes back to the abundance versus scarcity mindset. And when you have only Bitcoin and you're just sitting on a big pot of it, you get scared, right? You're like, what if it goes down? You're watching the price go up and down constantly every single day, and you're not thinking about new ways to get more fiat in to buy more Bitcoin.
Yeah. Yeah, because buying it at 64 is different than buying it at $6.
100%.
You know, you know, imagine a guy bought it for $6 and he could have bought what would that be? 10,000 Bitcoin. Today he has to pay to get one Bitcoin, 64 grand. Can you do that? Because if you can do that, you believe in the Bitcoin. And by the way, if it's your last 64,000 and you buy one, now I'm like, okay, why? What are you thinking? What do you know that I don't know? Why are you so convinced right here? Tell me. Okay. Now, all these guys that are predicting it's going to 40, it's going to 58, it's going to 54.
That's your brother.
My brother, dude. My brother's he's on this 58 bandwagon. I don't think he really believes it, by the way.
He's good at getting engagement.
Yeah, it gets great engagement, right? You know, we bought this week. You know, I'm gonna buy another 282 here in the next 30 days.
And so
and I bought it at 108, and I bought it at 92, and I bought it at 84, and I'm fine with it. I bought the real estate. I bought real estate that people said, hey, you pay too much for the real estate. 10 years, you won't say that. Mm-hmm. And if you buy best in class, pristine, perfectly located real estate, you're not paying too much. You could over leverage it, but you can't pay too much for one of a kind stuff. It's impossible. And so, this guy, Morgan & Morgan, that does all that litigation, he did $2.5 billion. He's like, look, man, this is a location game. I said, what? He's like, litigation is a location game. The guy that runs Louis Vuitton, he said, Louis Vuitton is not a clothing store. It's a location. McDonald's is a location store. Coca-Cola is a location game, okay? They get the best location in the store. Starbucks gets best locations. Any locations that are marginal, they dump them. McDonald's, same thing, location. So the location, Bitcoin is a location play to me. It can go anywhere in the world. Okay. It's invisible to the naked eye. It holds no space in time. Real estate, very, very heavy, solid, sits in a physical location. When you combine these, it's like a yin and a yang. Mm-hmm. And so whether I'm buying the Bitcoin at 58 or 48 or 38, I mean, I'd love to buy at all those levels. I don't want to. I would prefer to never have the chance to buy at 38,000 again, but I will.
And tying these strings together, you say that like the REITs, those investors from 1965, they're tired, right? You want to go into businesses where the people who have been there for a long time, they're exhausted and you can scoop it up for them on the cheap. And it sort of feels that way in Bitcoin right now. The people who have held for 10, 15 years, they're tired, right? We've seen these OGs sell out and then you come in and it's a completely new market, new people to sell to. And that's how Bitcoin will grow in the long run, right?
Yeah, and look, when we did this, we didn't expect the Bitcoin community to support the hybrid. I didn't expect any of them to. By the way, we have had Bitcoiners invest in the fund either because they wanted to support what I'm doing, or they like the hybrid. Because Bitcoiners tend to like real estate. You'll hear them talk about, both of them talk about, like gold bugs could have been Bitcoiners, right? There's that similarity of, there's a scarcity here. And the Bitcoin doesn't get a cash flow and the real estate does. So it does provide some solution for the Bitcoiner. But we did not expect Bitcoiners to support this in a big way. I really expected this to be supported by real estate investors that are willing to bet on Bitcoin as kind of a hope note or insurance, if you will. And that's kind of what's, so, yeah, that's what's played out. Mm-hmm.
But you've said also that these average investors for this hybrid are older than your regular investors, right?
Yeah. The demographic, I was wrong about the demographic. I thought it would go down. It went up.
Why do you think that older people would be into this?
I think because of the way the inefficiencies that Bitcoiners explain Bitcoin. Mm. There's a very inefficient. You need to read the Bitcoin standard. You must invest 100 hours in learning about Bitcoin. I'm like, fucking bruh, I don't invest 100 hours to buy a fucking car. What, are you kidding me? Like, nobody is investing 100 hours. People go to college and don't spend 100 hours in a class. Like, if you have to read a book and spend 100 hours learning about it, this is a failed product. So I'm not explaining Bitcoin to people. I'm explaining real estate that comes with Bitcoin.
And people use Bitcoin and real estate to retire, but you think retiring is a fool's game.
Well, it's because I'm not tired. So, I don't want to retire, dude. I never even think about it. I've literally never had the concept of, am I going to one day? I've never had, the only time I think about retirement is when somebody asks me the question, would you retire? I'm like, I don't think about, I think about how much juice can I get out of this physical body I have. So yeah, I don't think retirement accounts, IRAs and 401ks, I mean, they benefited Vanguard. They didn't benefit the regular person. Those, it's a scam, dude.
Yeah, they take your money for a long time and do.
Give me 30 years with somebody else's money.
Yeah.
And by the way, the IRS is going to benefit more in 20 years than they benefit today. So the IRA, the best real estate, the best retirement account on planet Earth is real estate. Bar none, nothing competes with it. Because at the end of the 30 years, at 73 or 74, whenever you're forced to withdraw, by law, the IRS forces you to withdraw 4% of your account per year. You're taxed on that money. With real estate, if I replaced my IRA or 401k with a real estate transaction and kept it for 30 years, I'm going to have all this rent growth for 30 years, assuming you bought a good piece of real estate. The real estate's going to be there 30 years from now, unless it's going to be there.
Yeah.
Even if it's old and tired and beat up, it's still going to be there. And then in that 30th year at 74, when I'm forced to withdraw the 4%, I don't have to withdraw from the capital account. I can live off the cash flow. And I can live off the cash flow for another 20 years. I'd be 94 years old. And when I die, now I'm really tired. When I die, okay, the real estate then gets transferred over to my kids because they're the beneficiaries of the retirement account. Whereas the Vanguard account will be exhausted 4% for 20 years. 80% of it has been exhausted. You only have 20% left in that retirement account, which the IRS is going to take most of. So with my case, I'm not selling my retirement account. I'm transferring it as a gift to my kids. The real estate will continue to produce income. They'll hold it for another 20 or 30 years and do the same thing that I did. Real estate is, without a doubt, the best retirement account on planet Earth that nobody does because Vanguard and Fidelity and Charles Schwab makes it so easy for people to load up into their retirement account.
All right, so let's land this plane here, Grant. I appreciate your time, but I want to ask you, you've done so much, right? You've written books, you've started businesses, you talk all over the world, but you say you got to constantly reinvent yourself. So what are you going to do now to reinvent yourself?
Oh, well, we're starting a wealth advisory company. So we're going to become a little Blackstone. And we're going to start managing people's money. We've raised $2 billion. We've crowdfunded $2 billion without an ad budget, using Instagram, Facebook, YouTube, allowing regular families to invest in institutional quality real estate. The funds they're 10 years with discretion to go another 10 years. So this is very friendly money. But you're going to see me get into the wealth advisory business in a big way and start managing. I have 20 million followers online. I reach about 200 million people a year on social platforms with education. We democratize success here. Any trick, hack, secret, gimmick, anything I learned that is beneficial to me and my company, marketing, sales, scaling, hiring people, I share it with the public. And I just give it away. Here it is. And then about 50 times a year, we do a real estate event. 50 times a year, we do a business event. I do about 100 events a year. And some tiny portion out of that 200 million viewers a year say, hey, I want to come see your event. And then they start doing other stuff with us, whether it's consulting or real estate investing, or they get involved in our Bitcoin hybrid, or, they hire us to consult their company. Well, every one of those people, we do business with about 158,000 people a year in our education company, another 20,000 in our consulting company. Those 200,000 customers every year, they all have bank accounts, retirement accounts, Schwab, Fidelity, Vanguard, JP Morgan accounts. By the way, these guys, these giants that I'm mentioning, have completely ignored America, regular people. Okay, like JP Morgan, like you need to drop $100 million at JP Morgan to get any attention at all. You need $1 billion plus liquid $1 billion to get a meeting with anybody at the executive level there. And you probably need $5 billion to get a meeting with Jamie Dimon. So, and that's not going to change. Okay, these $1 trillion companies are not going to suddenly start paying attention to regular everyday people. And that's a glitch. It's a glitch. They're too big to service the regular people. Grant Cardone is going to come service those people and build out like Charles Schwab did years ago with their discount offer or their, free to trade. So we're going to become like a physical Robin Hood.
Nice.
Like a bank, like a little Blackstone.
Amazing.
That's the transition, man. Everybody's got to transition. You're either going to transition or you're going to get transitioned.
How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code Bitcoin News and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino.